From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming trading session for October 15th in the euro dollar pair. You can see that we have just flipped over to the next day, to the 15th GMT time, and the candle for the Monday session that was printed was in fact a shooting star. The way I look at this chart is that we are simply consolidating in this general vicinity after a nice bullish move higher. That's very common. Markets have to, after all, take a breather. The truth is that they can't move in one direction forever, and that being the case, it makes sense that traders are simply kind of waiting to see what happens next. And you have to think, what are the catalysts? What could happen? Well, we need to get some type of clarity on the Federal Reserve and whether or not they can taper off of quantitative easing. I think that's part of what the markets are waiting for, but quite frankly, they're probably just tired after that type of vicious move, 400 pips and straight up, basically. It's not rare to see a little bit of sideways action and then a continuation. What I do find interesting is that the 135 level is squishy. It's not uh, a wall, if you will. We dip down a little bit below it, so it's possible we go below there because this certainly is a negative sign. But my favorite trade is going to be if we break the top of that shooting star, which is roughly 136. Ultimately, we could come back and find a supportive candle in order to start buying there as well at about maybe 134.80 or so. That being the case, the euro is a buy only currency pair at the moment, as far as I can tell, and therefore that's how I'm going to treat it. The Federal Reserve is not going to be able to taper off of quantitative easing anytime soon, and that, of course, will continue to plague the dollar overall.